All right. So this morning I took a very terrible loss on GJ, and I'm going to give you a breakdown of what happened in this trade. So this was after the news. So there was a JPY news today, and after the push, I started selling here. But this was a very good trade, and from when I got out of the trade, we have about 180 pip drop on GJ and on other JPY pairs. So like very good trade, but the lesson here on this trade was increased stop loss. So that's why sometimes the stop loss might look ridiculous, but it's good to have a very good stop loss for the trade you have. So if you know my style of trading, mostly I like to sell off demand and supply zone. So the reason why I went off the short was because price went violently into the demand and supply zone. So the first lesson here was I didn't wait for the candle to close. Sometimes what happens is when there is a violent push like that, you get that instant rejection. But here, we had that push to the upside, which is about 80 pips before price decided to drop. So here, if I had waited for the close and get in here, at least I would have saved. It still pushed up a little bit, even with a smaller stop loss. But you know, the difference here is after that push, there's a difference of 34 pips, which is a big difference. So one thing I could have done right in this trade was to wait for the candle close, which is tricky because sometimes you don't always get that rejection, but it's always good to which is tricky because most of the time you don't get like you get an instant pullback from the zone, right? But it's always good to wait for this kind of structure shift to give you a good idea. And let me also show you something you could have looked for in this trade. So on the 1 hour time frame, price created another supply here, which in this case would have been the perfect sell opportunity here. So we have a nice supply, price tap into the supply, and then boom. So this would have been a very perfect way to get into the trade right when price was pushing into this zone, and targeting here with a stop just above the zone. This would have given a very good, perfect 5:6, 1:5.6 risk to reward ratio, which you could easily risk 1% and make 5% on your account, which is very incredible. All right, so this is one main pointer from this trade. The 1 hour could have made things a little easier, and so that is the third point. The first point was not waiting for the 4 hour close on before getting into the trade, and then the second trade was looking for a new supply zone on if it's a buy, you'll be looking for a new demand zone on a lower time frame to get into the trade, right? Another third thing was the time of the trade. So mostly, okay, so this one, there was a lot of liquidity, so we can't really consider the time of the trade, even though the trade was an Asian session trade. But the point here is that if this trade was taken in London session, this level had already been created, or the rejection was complete at the London session, and you could go in for the short. But in this case, because there was liquidity, we can't really count that as a cause for that terrible trade, right? So those are a few pointers on this trade. The trade was a good trade, a good call to go short, but a few mistakes made things kind of terrible. So the important thing is to always learn every day, learn from your losses, and then learn to improve from there. And the next time, try to do something different and see how it goes, and you continue to learn. So trading is a continuous learning process, and you should continue to learn from your losses. See you in the next video.